Oh man, that's some good coffee. I don't know about a lot of you guys out there, but me, I cannot get my morning started without a good cup of Joe. What if I told you you can make $40,000 plus by not going to your local barista and making your coffee at home? I'll show you how. Let's get started. I know a lot of you guys out there are saying, well, it's not that easy to get into the market. I don't know where to begin. Finding a stockbroker is difficult. I don't know the correct terminology to talk to a stockbroker. Do I have enough money to invest to begin with? It's just too confusing, Alex. I don't know where to get started. Today, I'm going to help you with a few simple ways to get started for a lot of you new beginners out there. Now, I said you could save $40,000. I'm going to tell you how. I want you to think about that cup of Joe you buy at your local barista. For me, I always bring my own reusable coffee mug because I'm all about ecology, but I always get a double shot of espresso. It costs me about maybe $5. And normally I'll get like a chocolate scone or a blueberry muffin, something like that. Let's think about that. If I spent, I don't know, to keep it simple, let's just say about maybe $50 to $60 a week on that cup of coffee and scone, about $200 to $220 a month. Think about that over a long period of time. Right, so that double shot of espresso and that chocolate scone, if I spent $220 a month, that's about $2,600 a year. All right? Now think about that over 10 years. That's got to be maybe 28, maybe $29,000 you're going to spend on a cup of coffee and a biscuit or a scone or a muffin or a breakfast sandwich. Now, that right there is pretty bad. $29,000 on coffee and muffins. But now, if you would have invested that money, you would have made additional simple earnings of probably, I don't know, maybe $9,000, and then compound interest of maybe another $2,000 or $3,000. So the initial loss from the coffee and from the breakfast sandwich, plus the earnings you could have got by investing in, say, maybe like a ETF, and then you have the compound interest on top of that. So now you say to yourself, okay, that's all well and good, but Alex, how do I do it? Well, I think for a lot of beginners, one of the best ways to get started is to use a platform like Robo Advisors. Now, you might think to yourself, what is a robo advisor? Okay. And why I really like this option for a lot of new investors is because it takes the guesswork out of choosing the best stock or the best ETF or the best mutual fund or whatever you're looking for. Or for some of you, you don't even know what a ETF is or what a mutual fund is. So if you use a robo advisor, the great thing about this, the computer chooses the best algorithms to choose the best stock. Another great point about robo-advisors, the management fees are very minimal. Some of the robo-advisors might charge you 0.25 to 0.5% of an annual fee of the balance in your account. For simplicity, say if you had $100 in your account over a year time span, they would only charge you 25% to manage your money. That's pretty good, right? So one of the great things about robo-advisors, one, you can sit back in auto drive and let the computer choose the best mutual fund, the best ETF, the best stock for you. The computer does everything. It does this little matrix kind of thing, and it chooses the best stock for you. And for this service, a lot of these robo-advisors only charge you about 0.25 to 0.50. I will go over a couple in this video. I'm not sponsored by these particular robo-advisors, and it is up to you to do your due diligence before investing. Just a little small caveat. I am not a financial advisor, nor do I have any type of fiduciary credentials. I am here, a guy on YouTube, trying to make things a little bit easier for you to understand to help you get started in the market. I remember when I was in college and I took my first econ class, and I was all ready to get into the market. Back then, we didn't have those apps like Robinhood or Webull or whatever other mobile applications are out there. You had to do it the old-fashioned way. And I remember one of my professors said, you should invest in something you have knowledge of and something you're interested in. And I kid you not, back in the day, I was a mad pizza lover. And I bought like 10 shares in Domino's and like 5 shares in Pizza Hut and a couple shares in, I don't know, Papa John's. I was just loading up on my favorite pizza stocks. And while it was good that I was investing in something that I had knowledge, a little bit of knowledge about, that I really enjoyed the product, and I saw growth in those products, the problem I was having was I didn't have diversification. I was loading all my portfolio in one particular area. That's a bad move because if something happens in the cheese market, my stocks were gonna crash. I hope that never happens. But the great thing about robo-advisors is it gives you diversity. It might give you some type of utility stocks. Then it might give you some maybe biotechnology stocks. Then it's going to load you up with a few ETFs, a few ETF mutual funds. It will give you a great diversity of different stocks to choose from. And this is all done for the small fee of 0.25 to 0.5%. A lot of these robo-advisors, the initial just to get into the market is quite low. And I'll talk about some of those right now. So the first one, again, I am not sponsored by these companies. I'm just giving you some information that I think might be applicable for a lot of new beginners. It is up to you to actually go in and see what fits your needs best. But the first one here, SoFi, this is automated investor. This robo-advisor financial, it manages your investment portfolio with, I hate to say zero human interaction, but pretty close. You really don't have to do it. You just kind of set the controls in the beginning. Just tell the robo-advisor, I want X amount of money coming out of my account monthly, out of my, say, Wells Fargo or whatever bank that's in your area. You can have it pulled directly out of your bank account and put into the robo-advisor, and it just goes through its algorithms and does whatever it has to do, and it picks the best stock for you. And this is automatic. You don't have to do anything. You set it the first time and boom, it's good to go. So SoFi, it's not a bad one. This one, if you look at it, SoFi, the fees, the management fees here are 0%. The account minimum, you can open up an account with $1. I think that's amazing. And they have pretty good promotion fee right now, which is free for a year. Then you have other type of robo-advisors, for example, like Vanguard Digital Advisor. The reason I kind of like Vanguard a little bit more than the other ones is because it tends to invest more in the ETF market, the international ETF market, the bond market, and the international bond market. So you're getting a lot larger diversity because you're not only looking at, say, US stocks, but maybe you might be looking at stocks maybe up north in Canada, or you might be looking at stocks somewhere in Europe or somewhere in Asia. Vanguard actually gives you pretty good diversity in ETFs. And if you're not familiar with ETFs, take a look at one of my other videos kind of explaining what ETFs are and the advantages of ETFs. I like Vanguard Digital Advisor because it gives you not only that local market, but the international market as well. Some of the other advisors do that as well, but Vanguard actually, this is one that I prefer. Again, everyone's a little different, do your own research, but I tend to like Vanguard. Another that we look at is Betterment. Betterment, again, it has about that 0.25% management fee. Account minimum, like I said, you can open up with $1. And they have a promotion when you start out for up to 1 year for free. And then the last one here, this I see for individuals with perhaps a larger portfolio who maybe not just starting out, but this might be an option for you later down the line, Wealthfront. So here again, 0.25% management fee, but the account minimum you need here is $500. And they have a promotion fee of $5,000 for that first year. So again, Wealthfront is one of those robo-advisors that require a little bit initial financial contribution. So again, there's a couple different options out there, actually quite a few different options when looking for robo-advisors. So to kind of cap things up a little bit here, if you're new to investment and you're not exactly sure how to get started, what stocks to pick, how much money you want to initially put in, take a look online, look at some of these robo-advisors. I'll add the link below so you can take a look for yourself. And it will really help you because you get a chance to see how to pick the stocks, what to look for in the stock market. The robo-advisors, the algorithm they use to actually pick the stocks can actually teach you about the market. And after a year, you might want to pull off the robo-advisor and you might want to maybe start doing things on your own. So this is a really great stepping stone for a lot of individuals who are new to the market. If you like the information I provided here, hit that subscribe button, hit that like button. I do videos, I do make videos once a week, and I try to help out individuals that are new to the market, try to simplify things a little bit and make it a little bit easier. If you got any questions, comments, leave them down below. See you guys next video. Peace.